While they might be able to manipulate the inflation numbers and unemployment, they can't do it to certain data, and I'm going to show you that today. The very first thing is the big warning coming out from one of the biggest companies in the world, most important and integral to the global economy. Second thing is, what is the economic impact of this? I will show you that and all the data that I have prepared. And the third is the food and energy crisis that is still continuing today and what you must do, all of that and more. You gotta stick with me throughout this video because I'm gonna give you the information you need to know for these coming weeks, okay? Sound good? Let's go. Shipping firm Maersk is a barometer for global trade, and they are warning of dark clouds on the horizon. Interesting, because that is a quote that they had to say here. They know what's happening, and I'm going to show you a bunch of information coming from this. Every major news organization wrote about what they had to say, so it is extremely important. Quote, it's really hard to be very optimistic with a war on our doorstep and a bigger energy crisis this winter, so that is impacting consumer confidence and therefore also demand. It's quite likely that we are either or soon will be in a recession, certainly in Europe, but potentially also in the US. Now, we've been arguing about this back and forth all the time. Is it a recession? I don't know. Depends how you calculate it. Well, of course, what we can see is the data is there in companies like Maersk, and they are actively telling people what they believe. Dark clouds on the horizon, not being very optimistic, and that we are either in or soon will be in a recession. You could look at the stock market and you could look at one stock or another, but that's never going to be able to tell you what valuable information like this will. 3 months ago, executives of Maersk expected the container shipping market to peak and turn downward sometime in the fourth quarter. Just a few weeks later, they were proven wrong. It peaked sooner. Quote, demand for ocean shipping began its decline in August, and this was clearly observed in both rates and volumes. And hang on a second, because I'm going to show you the charts to confirm this information here. We have now seen the peak in extraordinary earnings. Halfway through the quarter, we began to see the long-expected normalization of freight rates, and those came down a lot. I'll show you in just a second, but I think it's important to say that we are getting into more normal times, and that's important because that's starting the process of demand destruction. When you have so much demand created by that fiat currency that was pumped into the system, you start to distort things. Things that should never have been valued at the levels that they were. Maybe it's a Peloton stock, or maybe it's Zoom. Oh, everybody's going to be staying at home forever, so the Zoom company becomes worth more than ExxonMobil. I mean, are we in a different world right now? This is the type of thing that happens all the time. We get exaggerations up and exaggerations down. So in this case here, we see the same thing with the prices of containers, for instance, which I was doing video after video about it, talking about this, and now we are getting back down to that level of normal. That's a good thing. That's a positive thing. We want to see that. The question is, why? Why is this starting to happen? Let's talk more about that. There's an inflation sting in Maersk's global demand warning. Shipping giant says price pressures may stick around, notes easing bottlenecks, but also high energy and labor costs. So he's talking about what we've been discussing here on this channel every single day, and that is when you increase interest rates, you reduce demand. Demand destruction is in effect, and you look at what Jerome Powell has said over and over and over again. We want to slow this baby down. And you only do that by making it more difficult to borrow, because stock buybacks, company advancement, individuals and what they love to do, all of that is financed by debt. It's not savings, okay? Companies and nobody does that apparently anymore. Apparently that's not a cool thing to do. Reversal of fortunes. The warning punctuates a stunning reversal for container lines. 9 months ago, the workhorses of global trade were struggling to keep pace with demand and basking in record profits, able to charge freight rates that were 10 times higher than pre-2020 levels. Now spot rates on the busiest routes from Asia to Europe and the US have largely returned to their historic norms amid sharper than expected, I love that term, slowdown in consumer purchases. You know what the problem was? It was the 2020 into 2021, not what we're seeing today. That's not the problem. That's simply the feedback. That's the reverberation. We're getting that now. You cannot do all that with, money printing and the stimulus and all this nonsense without creating an issue later. Most people don't make that connection, but I think it's pretty obvious. When you look at what has happened and you see all the nonsense that occurred, of course you're going to have problems. Of course you're going to have things that are valued way too high. Of course people are going to put money in places where they shouldn't have. Malinvestment is a very real thing, and we're seeing it front and center today, those effects. Check this out. But most big companies pay rates that are locked into long-term contracts, so the sting from inflation might not fade as fast as many people expect. Container capacity is currently so widely available that Maersk and others are canceling voyages to help them stem the slump in freight rates and better align services and demand. You see what they're trying to do here? They're trying to make sure that prices don't go down too far. We were loving those profits. I mean, that's just the way it works. Take a look. You can see it for yourself. Obviously, depending on the route will, be a factor in the price, but you can see in general, everything has moved down. We have this, it's the PMIs. When you see what this really breaks down to, it's another bellwether. PMIs, it's manufacturing, it's a manufacturing index. This happens to be from JP Morgan, but there are others, essentially showing us that this has been slowing further and further and further over the last several months. Then we have the inventory to sales ratio at other general merchandise retailers. And that's important because if you look at this, I think at this time right here, many companies, not just the Targets and the Walmarts, which we'll talk more about in just a second, are really holding on to way too much inventory. There's not enough sales. And that's part of the problem. You see, people are not coming into the door to buy everything. They're buying what they need. We haven't seen a major slowdown in some categories, but you can just see that, the froth has kind of come off in certain aspects. That's what I wanted to highlight. Right now, I want to ask you that if you are interested in this information, to make sure you hit that subscribe button down below, because I'm going to break down some really good stuff, not just in today's video, but in tomorrow's as well. Every single day I do a video. Don't wait for that notification to come to you. It's not going to happen. You've got to come to the Money GPS, and I'll bring you that information tomorrow. Take a look at Russia rejoining the grain deal after saying it received safety assurances. So they've been in and out on this, and I think it's important because we need that grain from Russia and Ukraine to make its way out into the world to keep the food prices low. Just imagine what would happen if there is a prolonged occurrence of what's going on between these two countries. It's going to be really terrible. Already it's been devastating, to say the least, and here we are again. And again, I don't know. I really don't know how this is going to end up in any positive way. It just doesn't seem like that's going to be the case. Food inflation revisited. Take a look down below. There's many charts, in fact, you could see for yourself. U.S. food CPI. We have wheat and corn prices. While they have come down from their peaks, you could see clearly that they are still elevated over the last, the chart goes from 2018 up until the present, and we have definitely moved up in many categories. This is the CRB commodity indices, measuring different commodities. You could see how they've risen. Yes, again, off the top, but still very high, too high for most people. And they do have other charts in here if you want to check it out, but essentially just giving you the idea that everything has seemingly gone up in price. People cannot afford it, and what happens? Well, you have a detrimental effect to the economy. People aren't buying, they're not spending, they're not going out, and the slowdown occurs. Fresh uncertainty in crop markets is bad news for the entire food chain. We do not need any more of this. We need some good news. But of course, this is what we see. What a week it's been for the crop markets. Russia's suspension of its involvement in the Ukraine grain export deal, which, by the way, they've been on and off again, depending if you what day you're checking this. But it sent wheat prices soaring before its subsequent abrupt reversal brought them back down. This is important because it's not just about that particular grain or anything, but we're generally seeing a lot of these prices going up, and as well the supply of it has been declining, but hopefully we won't have to deal with that much longer. Energy poverty in Europe. Looking at all of this, I see that people are paying too high of a price to make it affordable. I've heard from you directly, the people. You've told me what you've been experiencing, and my goodness, it's shocking. Some people are paying 2 times, even 5 times more in their energy over the last couple years. So imagine 2019 prices to 2022 prices, anywhere between 2 and sometimes 5 times the rate. I mean, it's so extreme, and I do not know if they were going to be able to get this down, because if they're not going to get that natural gas coming in from Russia, well, then what's going to happen here? The US, are they going to keep bringing this overseas? I really don't know, but understand that depending on where you are is going to determine how really bad this is going to be of a winter for you. Share of households unable to adequately heat their homes in 2021, and the darker area is greater than 20%. So there are some areas that have this, and it's truly extreme to say the least. I mean, come on, you've got Portugal and Spain around that 15% mark. This is really extreme, because you see a group of people, 15% of the households, that literally don't have one of the basic essentials. We've got energy, we've got food, and we have water. We have to have all those 3 things. We don't need the latest iPhone, but we certainly need these 3 things. Moldova is one of those countries that's really getting hit hard. They face an energy crisis as a result of Russia's war in Ukraine. They depend on Ukraine for power and Russian gas. And then we have this, that there's a major shift underway in manufacturing for US companies. So because of this order, which is new in this world, if you understand what I'm saying here, that we have to go away from what we did before, the just-in-time. We realize how terrible just-in-time inventory management systems, or lack thereof, is something that we probably shouldn't really be doing that much, okay? It just doesn't work, okay? It really doesn't, especially when you get to Q4, where generally things are a little bit busier. It is a terrible sight, to say the least. So people need to be prepared for this. Businesses need to be aware of this, and we need to be getting ahead of it all. Of course, at the same time, manufacturing supposedly is moving out of China somewhat to diversify into India and Vietnam, but they've got a long while to catch up. Look, I want to break this all down right now and stop talking a mile a minute. Here we go. Okay, so let's go right here. You can see demand destruction, what it entails. With demand no longer being present, retailers like Walmart and Target are liquidating excess inventory as quickly as possible. I've shown you the articles before, but those are just a couple names, the popular ones. Demand can be increased by reducing interest rates, but then inflation will rise again. So that's that catch-22 they've found themselves in, and I don't know if that could be resolved. How are they going to do this? How are they going to actually stop this inflation, at the same time not create a recession? It just doesn't make sense. Central banks are intentionally trying to reduce demand and growth, as everything was heating up to obscene levels. They knew this, they must do this. The question is that soft landing. Jerome Powell, in the recent FOMC meeting, he said specifically that this soft landing seems a little bit less likely. He actually said that. I couldn't believe it. Do what you must to shield yourself from higher energy prices. Call up your energy provider and say, hey, I need to get a fixed plan. Maybe you think that the prices will go down. Are you in that boat? If not, ask for fixed pricing. You can do that. Most will actually allow that. They're not going to offer that to you right up front, but you can ask. Watch credit card usage right now, as people are using them to pay their bills. And I understand it's tough times for a lot of people, but if we can avoid it, we must. People are paying for daily essentials with their credit card right now. Average person has over $20,000 worth of debt. And I believe the average balance on a credit card is over $6,000. Just imagine 18% interest rate, $6,000. You do the math. This is not a good thing. Try to avoid it if all possible. If you can get debt, if you need that debt, then get it from a lower interest if you can. That's so important, okay? So that's it. If you found it informative, hit that subscribe down below, and I'll see you tomorrow.